Hey guys, it's Ruben here. I just want to share how I would make $10,000 ASAP trading options. And if you had to start from scratch, like how do you start? What do you learn? Um, and how do you build that confidence to start making $10,000 in profit and more? Okay. And so, about 2 months ago, back in November of 2024, I started a small account challenge. I was developing a short-term strategy because a lot of the strategies that we teach inside TGE Max is very short-term. I mean, very long-term. So we're trading like leap options, shares, contracts that are 8 to 9 months, 8+ months actually, because we trade leaps as well too, and that requires a different strategy vehicle, and it's a little bit slower, but the returns can be really, really massive. Um, the problem with that strategy is that it's not the best strategy. Like the market is not always a swing trading strategy. It is a there's strategies that work best for day trades. There's environments that work better for day trades. There's environments that work best for only swing trading. Um, so during those days that are not swing trading friendly, I wanted to develop a strategy that took advantage of, like, it could be a happy median between a day trade and possibly a short-term swing trade. And this took about three key concepts. Okay, so it was and I'll go over those concepts as well too. And then that was put together, I shared it on November 2024. And here's some proof. Sul, uh, one of the TGE Max students, that 2 months of last year of 2024, he managed to turn a $2,024 account into $7,600. I got on a call with him for our end of the year one-on-one call, and he managed to almost 3x that small account just using the strategy alone. So that was really that was really good for me to know that, like, okay, this works extremely well and at a very rapid pace. So imagine, like, what would have happened if he stuck for it for like another 2 months. That could have been an easy, and at the pace that the account is growing, that could have easily gone to like 20K, maybe 30K, just on that type of growth. So and then the start of this year, he decided to start with $3,000, and he sent me a message early in the year. And you can see here, he sends me a screenshot of he's already up $1,400, and this was a couple days ago, actually, like the start of this week. Today's January 11th, so sometime early Monday, and he's up 52% on his new small account, which I believe, from the looks of it, it might have been like a little bit under $3,000 or something like that. So now he's told me he's on the way to 10K again, and it's all just using the same short-term trading strategy. Okay, so this is good for either day trading or uh, a short-term swing trade. So if you have time to monitor short-term trades, then this could be a good fit for you. And I believe this is the fastest way to make $10,000 without losing your hair on day trading and like zero DTE. If you can, this strategy also works for zero DTE, but you have to be really, really quick. That's the thing. Okay, so there's three simple phases to this, and I want to go over each phase, and you should definitely go in order, so you're not blowing up your account, because it requires practice. Okay, Now, Sewell, I've been training him for 6 months or so. So prior to him just grabbing the strategy, like when I gave him the strategy, he wasn't a beginner anymore. He knew a lot of the concepts and how to read the charts, how to analyze option flow data, how to create a risk management tool. So really, it was just like tweaking a couple things for allowing it to become a short term trading strategy, and so he was good with that. But if you're new and you don't know any of this stuff, um, I'm going to give you the phases to quickly make $10,000 in profit ASAP trading options. Okay, and if you want to know really what's the quickest way, you need to join TGE Max. I can work with you so we can get you up and running, because this is an amazing strategy and it's so simple. It only requires like three concepts. Okay, so first phase is of course like knowledge base. Like you have to know the knowledge base, and if you're starting from scratch, this is going to take about, if you can dedicate about 5 to 7 hours of per week just studying these concepts in while you're paper trading. Okay, this phase you want to paper trade as you're learning. It should take about a month, and that's pretty quick, just like um, learning and executing and just practicing the strategy. Okay, so the first thing you need to learn, and that I was teaching everybody when I introduced the strategy, was we need to use volume. So when you're looking at a chart, you have your candlesticks, and at the very bottom there's like a little graph here with bars and stuff. Like that's just the volume, and like you want to know like what does this mean when volume goes up, when price goes up, or you will need to know like what do I do when like price is going down but also volume is going down. And like what happens if you meet a candlestick here with high volume? Let me make this smaller. Like high volume. What happens when we meet a price like this? Like does it react to the upside? Does it stall? Does it break? So you need to learn how to like analyze these type of price action movements when with volume. Okay, so learn how to read volume trends and learn how to react on certain key volume candlesticks. Okay, so very very important. And this is something that was taught very in depth within TGE Max. Okay, so then the next thing you need to learn, okay, is option premiums, because the market, um, any stock is heavily influenced on option flow data. Not just because of speculation, but also because of how market makers react. Like market makers do something called delta hedging, and when they're delta hedging in the option world, they are buying and selling the underlying stock price. So, like, let's say you buy an option for Spy, okay, or Apple. They need they need to do something to protect their own books, and so if they're going to sell you the option, they need to buy the Spy or Apple. So in case that sell that they gave to you goes against them, the stock itself can like mitigate their P&L. Okay, so really important to leverage option flow data, learn the Greeks, learn what implied volatility does, delta, gamma, vega. Um, those are really like the critical ones to understand. And like again, like how do market makers behave uh, with a certain combination of like high gamma versus high implied volatility, or low implied volatility and high gamma. Like there's a lot of different combinations that you need to understand, and like you want to make sure that you're on the right side of the trend, right? Okay. The next thing that you want to understand here too is risk management. Super super important. Okay. Now, when it comes to risk management, which is what I actually, we don't need hedging here. When it comes to risk management here, it's really important to understand like what is your daily stop loss on an account, right? You have to know, like, um, am I willing? Are you willing to lose 2-3% on an account? And if not, or if you are, like, you gotta like divide. Then you gotta ask yourself, like, okay, how many trades do I want to take on this account? And if you, let's say that you can lose like 3%, let's say 3% is like $5,000. Okay, so you divide, like, let's say you want to take two trades. Okay, you can divide $3,000 by two, and that will kind of dictate how much you can size into a trade, right? Like, if you're gonna do two, if you can only lose $5,000 for the day, and you want to take two day trades, you could just divvy the 5,000, and then you get like 2,500 per trade, and then you could just do that. So in case a trade does go to zero, that's going to be like a percent or a percent and a half of your account portfolio, and like it's not going to be a big deal, right? Okay, the next thing that you want to learn is a stop loss strategy. Like, you need to learn to use the option premium. Most traders are using, like, they ask themselves the wrong question. They're like, how much can I lose on this trade? And everybody always says like 25%, but like that's the wrong question to ask. Like, one, especially when you're trading options, because you have theta, like, going against you. Like, theta, an option premium chart, or the value of it doesn't match um, the stock price itself, right? So like, if the stock price goes sideways, your contract goes down. So like, you have to protect yourself for theta and stuff like that. So what we do here, and the strategy that I teach them, is to use the option premium charts, like the swing highs and the swing lows, as support or resistance. So like, let's say you get a contract, the value is like $2 of the contract premium. Okay, let's say the most recent swing low is like $1.50. That's your stop loss, okay? Because if it goes below that, then price on the option premium can see a new low. And like, the thing is, like, we don't, just like the way the stock market has support and resistance, so do option prices. They have support and resistance. And then you are going to use volume analysis to also, like, not just study the stock, but to also study the option premium. Okay, so it's really, really important to to lean on the option premium, not just the Greeks, but also like the charts, the volume, okay, the breakouts. Very, very important. Okay, now profit taking strategy applies the same thing, like just the way you like analyze um, volume. Like, let's say you need to have like a profit taking strategy. So like, for example, um, something that's super simple is like, let's say you have this is the key levels. Let's say it goes from 100 to 105, but in between those, that price action, there's high volume on like uh 101, 102, 103, 104. You want to start taking profits on every single one. On once it hits every single one, like, do like a 60 20 20. So that's like three profit taking zones, and then that way you're not like losing money. Like, in case the if it hits a liquidity area, right, high volume candlestick, and then price starts to come back, you don't want to turn that 30%, 40% account or trade back into like 10% or 0%, right? Like, that sucks. Or even worse, like a red trade. So making sure that you have a proper profit taking strategy will save you, and it will help you compound. Okay, compounding is super powerful. A lot of traders that I know, and the reason they fail a lot is because they don't have a profit taking system. And so what they end up doing is that they end up holding a bag, especially with options, because options, you have theta, and if you're trading like short term, like, that can go to zero. So you don't want to do that with options. Like, you have to like take money as it's going. As like, if you're like long, if you're buying a long call option, you want to sell into strength, both, either whether it's like a short or a call position. You want to sell into strength. Okay, you don't always want, it doesn't even always have to hit the mark level. Just as it gets closer, just sell a little bit and then just wait and see what happens. And if it comes back against you, you use a stop loss strategy like a trailing stop loss. So you could just exit the strategy at break even, or maybe at a trailing stop loss like a 10%, 20%, whatever that is. Okay. So very, very important to have this refined, because option trading is not just about having an offensive side of things. Like, you have to have a good defense, which is your risk management, and just as good of a defense. Your offense has to be just as good as your defense. Like, it has to be equal. Okay. So don't skimp out on like these three things. Okay. This is good for offense. This is good for this. You're going to use the option premiums for offense and defense, and risk management is defense. Okay. All right. So once you like understand this and you're paper trading the strategy, it's like really, really simple actually. Like, if you just take a look at like a really simple strategy is like, you want to see like price consolidate, right? Like, okay, let's going to erase this right here. Like, here's a simple strategy. Okay, so it's like, let's say price is going up and then like it's consolidating, right? Okay, that's fine, but it's slowly going down. You can see that. Let's say that volume is going up, 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 and as soon as it reaches this area, it starts to just like die, right? Okay, that's good, because if you see something like that, that means that the sellers are exhausting, right? Okay, on the way down, it's consolidating. Now, anything could happen, right? Like, here's your consolidation, whatever, whatever. As an example, let's say you want to, when it's consolidating, you could take either side. Like, you don't have to be very biased. You could just you could take calls, you could take puts, but you don't have to be very biased about it. Okay, so that's the beautiful part about when things are consolidating. You could pick either side. You just have to be ready to pick a side when whatever side it decides. So like, if it goes down, you want to see buying pressure start picking back up, like with volume. Okay. And then you find the next liquidity area, and that's going to be your profit taking area, right? Okay. Now let's say that it goes up instead. Great. That's okay. Take calls, but you want to see price going up being justified by volume. Okay. You want to see volume picking up again. Okay. And so this is a simple strategy that you can use. And now, okay, what about the option premiums? How does that come into play? Well, you can do this by like using like gamma exposure, gamma profiles, figure out using the deltas to get expected moves, so a higher probability of like ranges. And so like, you're like, okay, here's based on gamma and deltas, like here is where we are. We are positive delta and gamma, and here is the key resistance area. So we want to aim for this. Let's say that this is 100. Okay, just aim for 100 then, right? Now, what about, so you're going to use the option premiums in that way, okay? And you're also going to use the option premiums to set stop losses, because this is just the chart, right? The next thing you want to do is like, you want to look at the, let's say you get 100 strike, right? You pick the 100 strike. This also has an option chart, and you want to see what the swing low is. Like, maybe this is a 125. Okay. And so if you're buying on the breakout up and it's going to cost you $1.50, you need to make, like, let's say things start to come back. This is your new stop loss, SL. Okay, this is your stop loss. So this way, this $1, 125, because you don't want to get caught up in like, sometimes this thing keeps going, like just the way like this has support, right? This consolidation is becoming a level of support and then it goes up. It's the same case for option premiums. So you want to use the swing lows and swing highs to create that kind of like support and resistance as well too on the option premium chart. So that's how you're going to use this for offense and also defense. Now for risk management, again, just you got to figure out like how much are you willing to lose. I don't recommend anything more than like 3% on a given day. And you also have to have something called a trailing max drawdown. And so when that's like just like tickers have circuit breakers, like where something goes crazy, like you need to stop that shit, right? So like you need to do the same thing for your risk management. Like you need to cut that off as soon as possible, okay? And so based on whatever your drawdown is and your daily stop loss is, then you can figure out what you're comfortable going into a size of with. So I don't recommend more than 3%. I think 2 to 3% is decent daily stop loss. Max drawdown is like 5% at the most. I wouldn't go anything more than that, okay? All right. So that's that phase. Now, while you're practicing all that, I recommend, like anything, use a small account first. Okay, start with a $2,000 account and just do one contract. It's going to be more than what is required for the sizing, right? Because it's a small account. That's just the nature of the game with small accounts. It's over leverage, but pick something not in the 8 to 12 months, but in the I would say 2 to 3 months expiration, 2 to 3 months. Okay, and so this gives you enough. It's short enough to be able to get great returns on intraday movements. Okay, and it's long enough that it gives you time to exit positions and not stress out like about it like going down or against you really really fast. So that's a great median right there. Oh, and the other thing too is that you want to use as for like time frame. I actually came to find out that the 30-minute time frame is really really good for both day trade and short-term swing trade. I like this time frame a lot. Once you get to the hour, it becomes more of a short-term swing trade. Um, if 15-minute, 5-minute, those are for like day trading time frames, but 30-minute is a sweet spot for like short, like a day trade or a short-term swing trade, whatever your preference is. Okay, and now also going back to phase two, just make sure like you're profitable for 2 to 3 months before you go to a bigger account. This is really, really important. Okay, because if you're not doing this consistently profitable month over month, okay, I'm not talking about day over day or whatever, like you want to have month over month profitability, then maybe there's something that you need to refine, okay? Something you're not understanding about these concepts that it's making you like not be profitable, okay? So there's that. So that's phase two. Do that for about 3+ months. I think that's the best way. And then probably if you could do this for 3+ months, you could probably get similar results the way Sewell did, okay? And you could probably actually by then already have your $10,000. But once you do that consistently, then you can go to phase three, which is you get a bigger size account. 25K is what I consider big size because then you could do margin and then you could do some other, you could trade a lot more and then also do some more complicated trades that can help you with things like spreads and take advantage of implied volatility crush or theta decay, but that's a little bit more advanced stuff. But anything above 25K is what I would consider a bigger account. All right. And so these are the concepts, these are the phases that I taught Sewell how to do. Okay. And it's the same way, like, just wait for a consolidation period. Use the option premiums to tell you key levels for high probability of reaching it by a certain expiration date as well too. And then also use the option premiums to help you with figuring out stop losses. Okay, this is short term. Pick for risk management. Again, small account size is it's a little bit difficult because of how small it is. But pick contracts that are pick one contract, stay consistent with one contract, and pick a contract that is 2 to 3 months out. Okay, give yourself some time. That's the best way to protect yourself while you see how this executes in real time. Okay, and if you can do that for 3 to 4 months or even more profitable, then you could pick a bigger size account and then you could do like really cool stuff like Sewell is doing. Cool. All right. And if you have any questions or if you want to see if we can work together, there'll be a link at the bottom for you to join the community and then we could get on a call or something. All right. Peace out.